I'm gonna talk about psychology in trading. It's a very important part. I would say it is maybe 50% of success in trading. So you should take care of your psychological part in trading. So let's start. First, I would say you need to set your rules, which is, for example, 3 times a day you're gonna look at the charts. Then, for example, 3 trades a day, or 3 losses per day, and then you will stop. And it can be also like some goal, for example 50 pips per day, which is very nice. And it can be also in percent. So for example 5% profit per day. Or when you want to manage your risk, then it would be something like 2% lose in 1 week or in a day. It depends on you and your capital and your success ratio. And then another thing is the time of your trading session. For example, in London session, New York session, these are the best for market moves, but it depends on where you live and, for example, when you work at your job and so on. Another thing is setting your rules in entries and exits of your trades. For example, entry after breakout, entry after fake breakout, entry after pin bar, candlestick, and so on. And exit rules, you can either have some rule for exiting trade, but it's better to set your stop loss, take profit, and forget about the trade. It's the best thing you can do. And that's it for the rules, but just to remember, it's very important to stick to your rules and never break them, because you will see then most of the time when you lose, it was just because you broke your own rules. So try to do what you have written as your goals, rules, and what you really want. Then you can, after rules, another thing is believing in yourself and your analysis. I will give you example. When you make your own analysis, for example, you draw few lines and you see that the market will probably go up, and you are just waiting for some signal, and then you go on social media and you see any person who is good at trading and he has the same analysis, but he wrote that he expects the opposite move as you, so you start doubting yourself and it's not good. And I can tell you from my own experience that it's the worst thing you can do to believe someone on the internet. 95% of social media traders are just on demo account, so I would never believe them when I don't see real results, or when I see that they want to teach me something, not just showing off. So that was about the analysis. Always believe in your analysis when you are educated enough. If you stick to your rules and you see some trade opportunity, just take it if you are confident enough and you haven't broke any rule. So believe in yourself, and after entering a trade, try to forget it. Don't be greedy, so don't open too much trades at once, and don't put your take profits too far, but again, do it according to your rules. And another thing, try to overcome your fear. So for example, when the market goes against you, you should never just be you should never move your stop loss or exit your trade just because you thought that the market will immediately go in your direction. It is never happening that the market will go immediately in your way. So just be patient. Another rule you can write to your rules to be patient as much as possible, and when there are some market news, I mean some news about economic situation and other things like this, and the market is moving very weird or crazy, just don't trade and wait for the market to be calm, or just look at the internet when the news are released and trade when they are not. But another thing is, many traders don't need news, or as traders call it, fundamental analysis. They don't need it. So you can make a living in trading without news. So just focus on the technical part, technical analysis, and use your brain and your knowledge. And another thing is probably the last thing I would say is never start trading live account without trading on demo account before. If you are beginner, or if you are trying new strategy or anything you are starting, just log in or sign up into your demo account and trade your strategy, stick to your rules and train your psychology. And after, for example, a month, when you see a good results, you can start trading live account with small amount of money. And even when you are very good, never trade with more money than you can afford to lose, because anyone can lose in the market. For example, imagine you are 20 years experienced trader, and then you, for example, put order to buy, for example, Euro USD, and then in somewhere in the world something happens, some market crash, and you lose. And if you, for example, don't put your stop loss there, it might be the end of your account and all your money would be far away from you. You will lose everything. So it is just examples, so you can know what I'm talking about. And I would say you need to practice, you need to train your skills and believe in your own mind, your own analysis, and just hard work and patience. That's all. So that's it for psychology part. I hope it helped you, and it was from my mind, so the speaking is not perfect and fluent, but sorry about that, but I hope you learned something new. So see you in the next lecture.